This video is going to be on UBS Etracs funds, SMHB, MVRL, and USOI. They're some of the highest yielding dividend funds out there. So I wanted to make a video about it. A lot of people ask me about USOI, so I made a video yesterday. But some of these other Etracs funds, they are ETNs. And one of my subscribers tried to clarify with me in the comment section that USOI was an ETN, not an ETF. And I wanted to explain that I didn't really get enough time in the comments because it takes too much time to write. But I'm very well acquainted with ETNs. I'm going to tell you about my mishaps that happen with ETNs. This number that I get here, this 100,000 per year in dividends, that comes now in a more responsible fashion because I used to own these UBS Etracs, these leveraged ETNs, okay? SMHB, MVRL, USOI. Those are some of the newer ones, MVRL, SMHB made it through Corona, okay? And MVRL is a newer fund, and we're going to go through that. This number that I make, 100,000 per year, I'll show you the performance really fast. We're up 19.7, the Dow's up 0.8, the S&P is up 9, and the NASDAQ's up 21%. So, and we do this tying our investments to the indexes, not to funds like USOI, SMHB, and MVRL, okay? Because these funds, a lot of them didn't make it through Corona, as I was saying before, okay? Some of them completely blew up because they have acceleration clauses, okay? We're going to get into that. I'll show you what I mean. So we use this margin purchasing power to squeeze out more income. That 100,000 that you saw, every brokerage account gives you margin purchasing power 4 times, in fact, if you go to the right brokerage. And so I use 250,000 in debt that I get more income with. And that debt I'm charged a pretty low interest on, if you're going to ask, once again, because I negotiated it down having a larger account and high trading activity. So, and this number can't get to 0 or we're on a margin call. This number is meaningless as long as I keep getting my shares, hold my shares and keep getting my dividends. I don't care. The position can go to 0 as long as these shares are here and I don't sell them. We keep getting the dividends each month, which pays off the margin at the end of, well, in about 3 years in a perfect world. 100,000 per year in earnings times 3 years is 300,000. So my margin would be gone in 3 years, my debt. So, and I'd be left with 668,000 in my account and 0 debt and all the cash flowing assets to myself. So that's the purpose of this channel, and staying financially free that's the big focus of this channel. Dividends, staying financially free, using margin, with or without margin, using these dividend funds. And UBS and Etracs are some of those dividend funds that many people use to try to get ahead, but I have to warn you, they got me into a margin call during Corona in 2020. Some of these real estate funds completely blew up. MORL, it doesn't even exist anymore. Let's go into MVRL, and I'll show you what I mean. MVRL has about a 20% dividend, 25% dividend, looks like 24.6. And it's really cheap, as you can see. So this could be an interesting play because mortgage REITs have all been getting hammered. We have some in our portfolio, AGNC, and we have some other real estate plays. And you can see our past videos on those. But MVRL, look, it's new. It came out after Corona. See on the chart here, after 2020 it came out. So it's new, okay? The original fund, MORL, which I was in, blew up during Corona, okay? So it has acceleration clauses, which means that when it hits a certain share price and goes below that share price, it goes to 0. So some of them were halted during Corona. Some of them the UBS halted some of the acceleration clauses or something like that. And SMHB was one of those that survived. As you can see, it was here before Corona. See, before 2020, it existed. So that's why I like SMHB, because it actually survived the Corona crash, which was a big test on dividend funds. That's why I like Cornerstone, because it did very well during Corona. But SMHB, it made it. So, and it has a 30% dividend. It was up 4% the other day. So this could be a sign of a bottom. Who knows? Small caps are cheap. SMHD does the small caps. Has a lot of real estate in it, but it does small caps. So if you're looking for small cap exposure, like I've always been looking for, like IWM, I use RYLD for my small cap exposure. If you're looking for small caps, this helps fit that bill, SMHB, and it made it through Corona. So again, SMHB is one of the only ones that I'll own. I own that one from time to time. I'll be trading in and out of it, but it's 100% maintenance. So as you know on this channel, 100% maintenance is a problem. I keep all these lower funds down here, these higher maintenance, lower quality funds at small position sizes, because a lot of them are 100% maintenance. USOI, as you remember, is 100% maintenance because it's one of these leveraged, risky ETNs. So, and you could probably go watch other channels about people who explain these ETNs and give you some great graphics in the background and some cool sound effects. I was looking at this one channel's Tesla rundown, and she did a great job. They're great graphics, but she didn't show how to play Tesla at all, or how to actually apply it into a real world situation. So SMHB. This is the only fund that I'll buy. I see a lot of channels trying to talk about USOI and these other risky ETNs, but they're 100% maintenance, and some of them blew up during Corona, and they have acceleration clauses. So this 100% maintenance is a problem for me. I'm going to buy 500 of SMHB because I don't want too much small cap exposure. My small caps, again, are coming from RYLD up here at the top. As you can see under GOF. So we have a 15K in RYLD. That has my small caps. Plus I sold puts on TNA, which is the Russell 2000, and I got $1,600 for doing that, 800 times 2. So I have small cap exposure through the Russell TNA. Everyone needs to have some small cap exposure. If you're looking at a proper portfolio for most people's retirements, they'll have like 70-30 bonds or 60-40 equities to bonds. But in those equities, I always have a small percentage, at least in the Russells, for growth. So don't want my margin to go up too high either. So anyway, that's why I'm going to buy 500 of SMHB, but that's why I don't buy too much of these UBS Etracs ETNs, because they collapse. They have, not only do they crash and sometimes in some situations blow up, but they have acceleration clauses. I don't know if they still do, but during Corona they did. And it doesn't really matter. They're 100% maintenance, and they decay badly over time. And they're not a large part of the indexes. Real estate, energy, not a large part of the S&P and the indexes. So I don't keep, therefore, much in my portfolio, because I'm trying to mirror the indexes for ultimate performance, not just to beat margin and stay out of margin calls, but this performance we get, it's because we tie everything to the indexes. So I'm not going to explain, the ins and outs of what these E-Tracks do. It's not really important. Again, go to the other channels for that, because they give you really cool bells and whistles to explain everything. But here at my channel, I'm just showing you real world situations and I'm teaching you how to apply it. And in my experience, UBS Etracs went very bad for me during Corona. SMHB was the only one that made it, so I'm going to buy that. Look at my available withdrawal, 115.5. Okay, I'm going to buy 500 of SMHB right now to show you how this drags on my available. So let's go to trading stocks and ETFs, because I'm going to buy it Monday. I think that if you saw that chart of the small caps, plus if you go to a chart of IWM, you'll see that small caps are still really cheap. IWM really fast, because this is what, again, SMHB tracks on a 1-year chart. See how it's at the lows from, this is at the low end of the range here. So in order for me to play them, I'll play it through SMHB instead. SMHB. Okay, here we go. Buy, market order, because it's liquid. 500, liquid enough. 500. preview. That's not exact. I want to make sure I'm getting my money's worth here. We'll do 110, 493, whatever, place. Okay, buy SMHB. All right. Now, if we go into the account here, you'll see we were just at 115.5. Now we're at 114.9. So it takes up all of my equity. Whereas if I were to buy 500 of Cornerstone at 20% dividend, that would only take up $100. With $500 of Cornerstone, 10% is 50. So 20% would be 100. So 30%, 150 is taken up. So if I would have been at 115.400 versus 115.5 or whatever it was before. Now I'm at 114.9 because that's how precious the equity is, and that's how sensitive, that's how important high maintenance is. Okay, you have to watch these maintenance levels. Okay, your account will if the market falls and your available withdrawal falls, you're going to be very prone to margin calls. Okay, so you don't want to have a weak account. Okay, so anyway, this video has gone long in the tooth. I don't feel like I'm tired. I've been making a lot of videos lately. I hope you enjoyed it. Watch out for UBS Etracs. If you're going to buy one, SMHB, but small amounts. It's not a big part of the indexes. It's high maintenance. It has a huge yield, though, and it's cheap. And if you want small cap exposure, there you go. Check that out. But real world experience has taught me that these acceleration clauses and these UBS Etracs are not the best for any portfolio, especially when using margin. So anyway, I hope you enjoyed the video. Email me for e-guides, margin e-guides, and cornerstone e-guides at aikentod48@gmail.com, and I'll talk to you soon. Thanks.